Here's everything you need to know about the opening range indicator report on edgeful.com. So here we're looking at YM in the last 6 months in the New York session. And pretty much what this report does is it takes the range of the first 15 minutes, which means the high and the low, the average high and the low of the first 15 minutes of the session. So in this case, we're looking at the New York session. So that means that we're looking from 9:30 to 9:45. If you're looking at the London session, that would mean that's from 3 a.m. to 3:15 a.m. Doesn't matter what session you're looking at, it's always the first 15 minutes of that session. And what this is doing is it's taking the correlation between that range and the range for the rest of the day. And pretty much it's trying to measure, or what it does measure is, if the first 15 minutes is very big, is that going to impact the range for the rest of the day? Meaning, is the range for the rest of the day going to be very big? If the first 15 minutes is small, is that going to impact the rest of the day? Is the rest of the day's range going to be small? And by range, I always mean the high and the low of whatever time frame I'm talking about. So in this case, you can see for YM specifically, now this is going to be very different for most stocks or most instruments, regardless if you're looking at stocks, Forex, crypto, or futures. But you can see that the correlation is actually pretty weak. And now we're looking at the 15-minute time frame, so you can actually change. So if I change this to be 30 minutes, now because I'm looking at the New York session, that's from 9:30 to 10 a.m. If I'm looking at the London session, that's from 3 to 3:30 a.m. It's just the first 15 minutes of that session. You can see that it actually increases to be a moderate correlation on the 30-minute time frame. And then if I go down to a 5-minute here on YM, it's pretty weak. And weak doesn't mean it's like not significant. 0 would be completely uncorrelated. It means that if the first 15 minutes is bigger, that has no relationship to the rest of the day. That is obviously not the case. It is just not very strong. So if I go to a 30-minute here, I'll actually just go to the first 15 here. And what you can see here is that if I go to the chart and if I go to a YM chart on a 15-minute time frame, you're going to see the first 15-minute bar, and that's this one right over here. Now, I'm specifically referencing the range for the rest of the day, meaning the range for the rest of the New York session, because we're filtering the data only for the New York session. We have these indicators that will automatically plot the high and the low of the sessions for you, so you don't actually have to figure that out yourself. And if you want access to the indicators, you go over here to the TradingView Indicator Access button. You're going to put in your TradingView username over here, click Update. You can find your TradingView username by clicking that button right over there. You're going to see edgeful. That's my username. You're going to see your indicators appear right over here. The one that we're looking at here is the market sessions. So in this case on March 24th, let's go to March 24th. You can see the opening range on the 15-minute time frame was 194 points on YM. So what I'm going to do here is I'm going to go from the high to the low, 194 points right over here. You can see right over there. That's the height or the range, the high and the low of that right over there. Now, the range for the rest of the day was 263. So 263. So what this does is it eliminates this candle here, and then now it's looking what is the highest high and the lowest low for the rest of the day. And you can see that it's from here to here, 263 points. So it's now ignoring this candle because we're checking the range of the first candle and the relationship to the rest of the day. We don't want to include this candle in this calculation because it could skew it very drastically depending on the size of that candle. So for YM, if you see that there's a very big first candle, that you do not want to expect there to be a very big rest of the day. If you're looking at another stock that might, or another instrument that might have a stronger correlation, that's your signal to say, hey, I see there's a very big first opening range. I want to continue. I want to expect more continuation for a larger range today. So that's the way that you can use this. You're not going to be able to take a trade exclusively on this. It is just helping you figure out more so the context of the day and what type of range that you can expect. So tighter ranges usually mean choppier price action. Larger ranges mean more continuation. A lot more people have more success in larger ranges, more continuation, easier price action to trade. But this is the report to go to look at this. If you have any questions, reach out to our support down here, send us a message. We'll get back to you as soon as possible. Thanks for watching.